very exciting time for Orezone right now. I'm actually in Burkina Faso right now. I'll be here for the next 10 days, just checking up on things. It's a lot going on right now with us. So since we last talked, I think we've now very far into our detailed engineering. We've ordered pretty much all of our mechanical equipment, significant amount of our electric equipment, all of our plate work for the CIL tanks, the structural steel. We're awarding 2 of our major contracts this weekend. It's a really exciting time. In cost inflationary pressures right now for the mining industry, iron ore's gone up, copper's gone up, shipping's gone up. And so we're really trending very favorably in terms of our capital cost estimate, which was completed in 2019. And since then, we've also raised some money for the silver, and we're doing some exploration. I'm really excited about our exploration, the results that we've had to date, and I think the results that will continue to come, which will be a very strong catalyst for this company going forward. So it's exciting times. We're right in the middle of build. We're still drilling, which is sort of interesting for a construction company, particularly a junior company, and things are moving along very well. So I'm really happy with how we've got out of the gate. I'm really excited about where we're going to be in the next 12 to 18 months.
Brilliant. Hello, Paddy. Great summary. Nice to see you. And actually not a bad connection considering you're out in the field in Burkina Faso. Congratulations.
Yeah.
Have you hogged everyone else's bandwidth?
That's what I've told them. Stop watching Netflix. I'm on the line.
Good man. Hey, look, Paddy. We spoke to you in the middle of February, right? And you're in the home straight now. You're going to build this thing. There is no doubt. And finally, business is quite a simple thing. It's money in, money out. So you hit upon a few key points there in terms of some of the orders that you're placing. I do want to talk about those, but let's just look at some of the things that you've done since we spoke. I think in February, you've done the debt in place. What's the update on that? Yeah. Because announcing it and actually getting it ready to actually draw from is another thing.
Yeah, so we had to raise the equity as well, and obviously with every debt package, you must draw down on the equity before you get access to the debt. We're finalizing off what's called the intercreditor agreements, which are the documents between the bank and the convertible debenture. So it's a process that you go through. We're fairly well down the path right with that. And in fact, I'm hosting the banks on the project this week. So we expect to draw down the convert sometime September, October, and then we'll be into the main debt in December, January. So what I can tell you is that, we got out of the gate very fast. We did have COVID where we were delayed on the debt and, people were wondering what was going to happen. We used that very much to our advantage. We went back into the feasibility study. We looked at all of the equipment. We looked at all of the layouts, etc. And we were ready to hit the ground running once the debt was in place, once the equity was in place. So we got our orders in quickly. I'm so glad we did that. I got to give Lycopodium a huge pat on the back in that regard. We put 2 guys in their offices, so there's a very fast turnaround on documents going out, orders being placed, etc. But as of this morning, because I've just gone through it all, we've pretty much ordered 90% of our capital equipment. We've ordered a significant amount of our electrical equipment, transformers, MCCs, etc. We've ordered all of our CIL plant plate work, which is the big plate work for the tanks. We've ordered all our rebar for the concrete. We've ordered, placed orders for the structural steel, which is all of the steel work on top of the tanks, all of the tank, the pump boxes, the walkways, all of that's now out and placed. And we really have beaten a lot of this cost pressure. I'm so pleased that we did it.
Explain that for people, Paddy, because the cost pressure being what? Prices are going up and you've managed to fix your...
Yes.
Right, okay.
Well, absolutely, they're going up. And, you've got steel, structural steel now has gone up probably 30% since we placed our order. So, like MCCs, copper, all that stuff, transformers, that's all gone up in cost. Because we had sized everything and we didn't change it, we were able to get out there and get those orders placed. And like the ball mill, we went out there like day one, we went out for the ball mill and, we got it significantly below the feasibility study number. And you will see, and some of the, that I'm showing you here, that the ball mill fabrication is going very well. We pop into the shop. It's been done in South Africa. So some of our key guys are on their turnaround. They go in, they live there, they pop in, see to make sure that it's going well. We've already got orders that are ready to go to shipping. So we've ordered all our HDPE liner for our tailings. We don't need it to put it in until next January, February. But we knew there was going to be cost pressure on the HDPE liner. So we knew the quantities of the tailings pond were not changing. All we did, to be quite frank with you, we just added 10% to the neat quantities that Knight Peacewold had done on the tailings design, and went out and got the order in place. And it's now been shipped. The first rolls of HDPE are landing in Cote d'Ivoire this week. So we beat that cost pressure. If I was placing that order now for shipment for February next year, I'd be paying 20 to 25% more than I paid in March.
It's very encouraging for you. I mean, well done. First of all, you're just getting on with it, and I appreciate you talked about the debt and the equity getting sorted. You've given us some timelines, but shaving costs off and placing orders early, because costs are rising significantly from what you're saying. The inflation there is crazy. That's going to allow you to actually hit some of or beat some of your feasibility numbers. That's what you're saying. For others, it doesn't bode well.
Well, I think you're going to have to be very careful now. One of the things that I would suggest for anybody out there is, if you've got a feasibility study, go into your quantity takeoffs, go into your assumptions on your geotech, on all of those other things, and make sure that you're comfortable with the quantities. We did that as well. I mean, I'm really happy to say that our quantities on our concrete plate work steel are very much in line with the study. But just go back in and make sure that we did make changes. We saw things that we felt, okay, we could cut things here. So, what I'm saying is, the 155 in the study is still 155. But there were changes that we made to make sure that, we got to pull back on this a bit. We got to do this a bit. But it wasn't major, but we did the work. So we didn't go, oh my goodness, we're now in trouble. What are we going to do about it? We saw things coming. We talked to LICO very carefully. Where are you seeing the pressure? What are you seeing happening? How do we overcome this? What do we do? And we got out there fast. And so I would suggest that anybody who's feasibility study that's thinking of raising capital, because the banks are looking at it. I'm telling you, we've got the banks this week on site, and one of the key things they want to see is, where are we at with costs? Where is things going? Can you walk us through it, etc.? So we are now able to show them all the POs we've placed, all the quantities that we've done. Our two main contracts for the concrete and the tank erection and overland pipelines are being awarded this weekend. And again, I can tell you they're within that feasibility study budget. So, we're able to show that to the banks. The banks have comfort that things are moving and moving well.
I should be staying on your company, and I will come back to it, but it just makes me think about other investments that I could be making and whether or not I trust the numbers which I've been using in terms of some of the study numbers, right? With inflation like you're indicating, this isn't a West Africa problem. This is a mining problem across the globe, right? Okay. Yeah. So most companies are going to have to go and revise that, and they've got two options. They can remove items or put assumptions in there which just they're not going to be able to deliver on. And if they're not a builder, I guess they don't really care in a way, or they're going to have to come up with some way of saying to the market, you know what, it's not our fault, but our prices just gone up 20% across the board.
Yeah. Look, there are some things that you're nobody's at fault for. Things like exchange rate assumptions that you've got, because we're all buying things all over the world, and exchange rate, particularly if you're a single asset company, you don't have a foreign hedging, account. They don't give it to you. You don't get what are you doing it against? Nothing. Fresh air. So they're not going to do that. So you got to take an exchange rate risk, and so when you get your money in and you raise your money, you got to determine, when am I going to change it to whatever currency I'm going to change it to. So that's a balance that you just don't know. I mean, if you've got a good treasurer and a smart treasurer, he can help you there. But I would suggest that, some studies are overinflated. So you go in and you go, well, look, we do have too much concrete here, but let's just leave the number because cost is going to go up. So I would suggest that people do, reopen things, relook at them, and don't surprise the market. The market now knows there's going to be cost inflation. Just, look at it, up it, and tell it what it is. I mean, once you're doing the work. The one thing that I would say about West Africa, though, we are not seeing labor rate pressure. That's not occurring here. There's still a fair amount of people looking for work. There's good quality skilled people here. We are not having that pressure here. The other one that I'm seeing pressure on is shipping. Container freight, bulk break is all going up. And again, you've got to tie that to some index to try and keep a control on it, to look at what you're doing, how you're packaging things. You might get something that we've looked at. We were very careful. Well, okay, it's cheaper to buy this X piece of equipment in Australia, but when you add the shipping on to Burkina, it's more expensive than buying it in South Africa. So that you have to look at things at a holistic level and make sure that it's what it costs you FOB site, not what it costs you leaving that equipment supplier's facility. So
right.
Make sure you got smart guys on your team who've been there, done that, seen it, and worked in the environment you're working in.
Well, I think we will definitely have to reassess our assumptions on the costs of things, or at least get up to date with them, because if things are moving this quickly, it's slightly concerning. I guess it makes those kind of just about okay returns type projects that you sort of look at occasionally and think, well, it might be okay. Makes them less investable.
It's not all doom and gloom. So, what tends to happen is things go up on the basis of expectations, and then the expectations don't fulfill themselves and they come back down again. So I would just be careful how don't be doom and gloom about it, but have a good, careful look at things. I mean, for example, a lot of it is driven, people are saying it's driven by consumer demand, pent up demand for things. And, I've got tons of money because I couldn't go anywhere. So now I want to spend it on stuff, and now the shipping rates go up. That could change in a heartbeat if vaccination rolls out and people start saying, well, you know what, I'm not going to buy that because I'm going to holidays in Greece. I'm going to spend the money. So now what people thought freight rates were going to, don't go there. So you got to be watching it carefully all the time.
Good advice. I'll watch it. One of the things that does consistently go up are energy costs, but you've done something about that.
Yeah, we have. Yeah, whoa, that was something. So look, we are the first company in Burkina, mining company in Burkina, first company in Burkina to have an LNG energy power facility on site. It's with the government. You probably saw in the press release that we had the Minister of Mines and Energy actually make a quote on our press release. They were extremely pleased that A, we were building the project, and B, that we raised our debt in Burkina. So that 110 million stays in country for other investments and can potentially show other mining companies, look, you don't have to be at the behest of foreign banks. There's money here to help you build a project. On that basis, we got into the potential of bringing this LNG in. The negotiations went very well. They're a very, very experienced company, Genser. So we have now got a life of mine, power supply, no escalation indices in it for an LNG solar plant. Our carbon footprint right off the bat is extremely small because most guys in Burkina use HFO. And it is a dirty fuel, whatever, but it's sort of what juniors and whatever are forced into from a cost, because energy is a huge part of mining costs. So we've got this for the life of mine. It gives us cost certainty on a major part of our input costs into the project. We're off and running right now. The Genser people are on site this week as well. And, we're extremely, extremely pleased about that. So as a junior company, we're one of the most competitive costs of energy for a life of mine on the project.
But that's the bit. See, that's the interesting bit. LNG, lovely. Solar power, lovely. Life of mine. So how do you fix terms over life of mine, given we know energy prices go up? Anywhere in the world, the energy costs, you're looking at they're continuing up. Look in South Africa, look anywhere in Africa, right?
Right.
What does that mean? Are you paying more now, Or is it
No,
amortized because
no,
it's been amortized, or how does it work?
no. We're not paying anything up front. So all the capital goes in by the company. They're putting the project, they run it. We give them camp space, obviously. They're going to be behind our secure camp and we feed them. But they maintain it, they run it, they provide the power. We have to use a minimum amount of power per annum in terms of schedule, or else they back charge us. Typical, build, own, operate, or over the fence contract. How do we get a life of mine? Well, obviously they've got to tap into LNG somewhere. I don't go into their business, but a big part of it was giving them first entry into the country. And if they prove themselves here on this regard, there's a huge market for them, because the power supply company themselves, the guys who generate power here in country, Sonabel, they're going to look, and they visited all these facilities with us when we did this and did all the due diligence, etc. They're going to look at this as one of their long-term, potential power supplies for the country, and it's cheaper energy for all of the population, etc. So we just happened to be the first entry into the country. So we were able to negotiate a very good contract for us that helps everybody down the line.
So they're paying for all the kind of capex component up front. What happens if they keep doing that? They run out of capital. What do you do?
If they run out of capital, well, they're a big company. They've got power contracts all over the world. So I just can't see that happening. We've done our due diligence on them. They've supplied power to Kinross, to I think Barrick, to Goldfields, to Golden Star. So this, and plus many other facilities. So this is a pretty big entity. So we're not
one big fat balance sheet. So you'll be all right.
Yes.
Okay. Had to ask.
Look, believe you me, they're not losing money on this. They're not doing this to lose money. But what we weren't able to negotiate was the life of mine entity to do this. So, the machines, LNG machines last forever. They're not like dirty diesel machines and things like that have to 10 years. These things last for the life, absolutely 20, 30 years. So they're not as if they're replacing capital. They're not doing that. So once it's in and it's running and they've paid off the capital in 8 to 10 years, they get the gravy as well. There's nobody's crying to the bank here.
Okay. I just think
I'm extremely, extremely happy.
Okay, and as a shareholder should be. It's always worth asking. So these kind of very capital intensive companies, which are having to fork out a lot of money up front for these large bits of equipment because you don't want to, that kind of piles on the debt. Companies do get into difficulties. The what if scenario there for it being you just revert back to kind of conventional energy supply, would it?
Well, they're actually putting in a diesel backup that's right there. So that was part of the contract.
Right. Okay.
So it's full diesel backup that's sitting behind it. Whether they run it or not, I don't know, but it's there.
Got it. Okay. There you go. You've also been drilling, because I know you're building, but you're also drilling. Some nice numbers came out last week. Yeah. Look,
we did the silver stream. That was essentially, we haven't, that money's not in the kitty yet, but essentially to look at some experts. We talked about it, but look, to be honest with you, we were very quiet about this. I went to site in January, February. I really wanted to drill under an area called Maga because it's such a bullseye, and we've got, it's in the sulphide plant now. And I thought it would, provide some certainty to the market that it was going to get bigger and be part of an expansion. My team sat me down and went, look, P17, right now it's small but high grade, and we've hit something as we were drilling out on the other arms, and it's not part of the current, system. And we think it's got some potential. So we looked at it and it was shallow drilling. They said, well, if you're right and it's coming up to surface, well, let's drill some holes. And if we don't hit it, we don't hit it. But if we do, hey, but boy, did we hit it. And now this whole thing looks completely different. P17 South itself is, the narrower arms, good grade, very mineable, whatever. This thing now blew out on the east. It's a big package of granite diorite. It's juiced up. Continuity is beautiful. It's a stacked system. So when I say that, when I'm mining through some of the smaller ones, I'm mining through the big ones. So lots of tons per vertical meter. Excellent grade. We've now got this gap between P17 South and P17. When you look at the drilling at P17, and it was something they didn't fully understand. They had no idea this was a folded granodiorite unit at the time. They stopped drilling because they lost it. They lost it because it's a fold. Now we got it again. So now we've got two ends of a high-grade system that's wide open. Interestingly enough, if you look at WAF, our neighbor, so the whole area is us and WAF. They actually surround us. They bought B2's Tawega project. Guess what? It's a folded granodiorite, exactly like this. And if you look at their presentation, it's pointing north. P17 is exactly north of it. So this is a big belt for us. Secondly, the geologists are now realizing that there's a certain chemistry on the granodiorite, and if we see that, we're in it. And we saw it at another area called Siga. We didn't know it at the time. We hit it, some really nice grades, Siga East. And now we know that's wide open for the same system. So we think the major shear comes down the belt, and this granodiorite unit is folded all the way around it. So it's a huge exploration upside for us.
Fantastic. So with the silver stream, so I was going to get onto it, but with the silver stream that you have not drawn down on it yet. You haven't received,
no.
Right. Okay. So when that comes in, is that all going to go towards exploration?
Yeah. So what we're going to do with the silver stream is, now it's the rainy season, so we just wrap up this program. All the guys we have more drill results to come, and I'm very excited about those as well. So and once they're out, then we'll evaluate P17 and P17 South and P17 North, because it's quite a fairly large area. We'll go back in at that time. The guys will have done all of their, sort of technical work on Siga East and Maga Hill, not Maga. And then we'll come back with a program that will restart again in probably October, November, to really open up this whole area for us. And I want to say this is that now this is all open pitable. It's right at surface. What we're adding here is a lot of high quality shallow ounces that will really help us look at a potentially major expansion to the sulphides. So instead of having 2.2 million tons, we could well be looking at 4 million tons. We believe we could support 4 million tons with what's beneath Maga and Siga in the main belt anyway. But now we get much better grade, nearer surface. And so this is trending towards the sort of 250,000 ounce a year type of project.
Okay, and so give people an idea, just some numbers that they'd relate to in terms of amount of meters that you could be drilling, and obviously after the rainy season. When rainy season is what? So October? After October?
Yeah, it's starting now. The rainy season, we're in it right now. It will end in September. End of September. Yeah. You gotta let the ground dry up. Right. And so probably November we'll be back at it. Right. What size will that program? I really can't tell you. It will certainly be tens of thousands of meters, but I couldn't really tell you. And it really depends again on what the guys want to do, how we want to do it. Do we want to go full bore on P17? Do we want to spend some money and follow up on Siga East and Maga Hill? Because if we hit on those now, as a M&A company, we're in a hell of a great position. So we've got a mine built, we've got huge upside.
Fantastic. So, I just wanted to ask you, there was a slight little blip in your share price there at the end of May, I'd say, beginning of June. What were people worried about?
I really don't know at the time. Maybe somebody just decided that they wanted to get out and go off to another sort of development story. Are we on track? And people might have thought at that time, to be frank with you, well, costs are going up, so they're not going to build it for their cost. So I'm getting out before they tell me. But we're able to tell them now that just relax, sleep at night, because I'm sleeping at night on the cost. So don't worry about that. I think the quality of our estimate, how we've got out of the gate, the equipment we've ordered, the contracts we're letting, we're in very, very good shape. So I think it might have been a bit of that. Then people started to get real confidence again. This is going well. I think the power supply one definitely brought buying back in. People saw, you've got a life of mine power supply contract. It's the cheapest in the country. You're not putting up capital, etc. So a lot of the guys who look at the development side story and that you're trending very well, come into the story. Same happened to Rocks Gold, same happened to Atlantic Gold, where funds looked at these guys and go, this is going to work. It's going to get re-rated. I got to buy it now. So we did recover, and we recovered very well. And then, of course, the exploration added a lot more excitement to it.
Brilliant. Paddy, lovely to catch up with you. You better get out there and crack that whip with the boys and girls.
We're doing it.
And maybe I'll speak to you when you get back over to Canada, okay?
Absolutely. Absolutely. I'm fully vaccinated now, so I'm good.
It's all about you.
Yeah, it's all about me, baby.
Okay.
Excellent. I'm very happy to give you an update. And pleased things are going well. Orezone, it took a while to make sure we had the ship on the right track and going in the right direction. Great team of people now. Everybody's so enthusiastic about it. Going very well.